hot off the heels of Spargos and the rebrand situation, you've also announced this Morgan Stanley renegotiation. Do you want to talk to us about that? What happened? How long's that been in the works? Why couldn't you have told me Monday?
Well, it wasn't completely signed on Monday. It's been in the works for months now, actually. When we announced our renegotiation back in December of 2019, that was phase one. We were always working on phase two. We had a strategy and a plan to do everything we could to get this royalty eliminated. And this really, as you know, we've been talking about it for some time, opens up this district. This royalty had been in this area for approximately 2 decades, almost 20 years, Matt. So now we've just further taking advantage of what we started. We started with phase one, quickly did some drilling, identified 5 areas. Now phase two comes along, we wipe out the last 2%, we take out the NSR component of the legacy portion of that royalty. This is a game changer for us. This really gives us flexibility, optionality. This is an opportunity where a company takes advantage of spending $1 and where it creates $2 to $3 for our shareholders. This is the best way for us to be spending our money to create value for our shareholders. So I'm jazzed, I'm excited. It's one more step in our strategy, one more thing, part of our focus. We've been in control for a long time now. This has been part of our strategy. We've executed on it.
Okay, I mean, a couple of things there. What price did you end up paying for this?
Yeah, it was $9 million US. Just think of it this way. Look at it this way, Matt. Today, we have at Higginsville, when we bought Higginsville, we have 1.9 million ounces in our resource, Matt. Measured, indicated, inferred. That's all 3 categories. I know you're supposed to split them out. We have 367,000 ounces of 2P reserve. You start looking at these numbers here, these things pay themselves back quite quickly here. And the first 5%, it was phase one. You can effectively say from the beginning to the end, a royalty that's been in place for 2 decades, we've really paid $9 million. It was always part of our strategy to continue doing what we're doing. So for us, again, $1 spent worth $3 for our shareholders in return as we continue to unlock this district here. And our backs aren't against the wall anymore. We now have Spargos. We've got Spargos in play here. Let's say we get that completed. It could be as soon as Q1 that we're mining in Spargos. We have no royalty here at Higginsville. We have more flexibility and optionality than we've ever had in our lifetime, not so reliant on Beta Hunt. The grade of Spargos is actually higher grade than our underground at Beta Hunt. And I know we're talking about this royalty, but all of these things together are part of a larger strategy. It's that simple. I can't help but be excited about eliminating a royalty. I've been mining 33 years, Canada, the US, Australia, South Africa. It's very uncommon that a mining company can actually repurchase or buy back or eliminate their complete royalties. It is a very challenging thing to do. And how many of us look at ourselves in the mirror and think we're a little bullish on gold here? I'm certainly bullish on gold. I think what's in front of us is pretty exciting. The 1.9 million ounces of measured, indicated, inferred is without a drill hole. That's without any drilling. We inherited that resource. Once we start drilling, this thing here could double. Then we're going to look back in time and go, man, are we ever glad we were aggressive and we got that thing eliminated? So I'm very proud of the team. I'm very proud of the success. I think it's an amazing step forward for the new company as we proceed.
Look, I can hear you pumped and excited as ever. I've been talking to people in the market about what the generation of this free cash flow that you're producing now. You are making money month after month, quarter after quarter, and it's giving you optionality, which is great. And it's a case the market's sort of looking at you to what you're doing with it, and you're saying we're going to put that into the exploration of these 5 new targets you've identified. You've made this acquisition at Spargos. You've renegotiated the Morgan Stanley deal, which is obviously fantastic. So those are all options that you've got under your control, and I think that sends a big, loud message to the market, which is fantastic. But you've done something else. You've also done you're proposing a share consolidation. Why have you done that?
Yeah, so actually, let's clarify that. So we put that in our management information circular based on the heels of our shareholders. This is us as a board and as a company listening to our shareholders. We have had a large amount of institutional shareholders, even some retail shareholders, some very significant retail shareholders have said to us, why wouldn't you do this? We said, let's pose the question to the people we work for, our shareholders. Let's put it in the management information circular and allow our shareholders to direct us by voting on it. What are the advantages? Look, there's some clear-cut advantages here too, Matt. Like, let's face it, our biggest shareholder base is in North America. We open up the door for funds that can buy over $1. Right now, there are a tremendous amount of institutional funds that we would love to see in our shareholder base register that don't exist only because our share price is below $1. Secondly, it also unlocks opportunities for funds with margin accounts. It creates opportunities to buy with margin accounts. So opening that door will create an opportunity for us to get additional shareholders, which is certain. In fact, I actually had a call with one large retail person who said, if you do this, Mr. Huet, you're actually going to give me free money. And I didn't understand what he said. He said, let me clarify. My own margin account will be created by you doing this in my retail. He's a retail shareholder. He said, I'm now going to have an extra $50,000 that I'll be able to do whatever I want with because the share price is over a certain price and it's not a penny stock anymore. Look, from the 19 cents we were at our low, at 50 cents here, we're 2.5 times. There's a lot of room here for opportunity and growth for us. I'm always a firm believer, Matt, that you can't go wrong if you listen to your shareholders. You're not going to make everybody happy, but you should always at least listen to what they have to say. And this is a perfect example of us doing such a thing.